Namaste, viewers. It's Friday morning, May 2, 2025, and I'm your host, Sunil Thakker of Sunny Talks Money. Welcome to ST Money 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. Benchmark indices Nifty and Sensex gave up early gains to close in the red, snapping a two-day winning run and ending the month of April on a tepid note. After a strong rally in recent sessions, the market took a breather. Both indices ended a volatile trading session, nearly flat amid lingering geopolitical concerns. Stock-specific trading activity dominated the proceedings on the BSE and Sensex for the second straight trading session, as the benchmark indices consolidated in a thin range. Trading activity was thin as investors preferred to remain on the sidelines ahead of the trading holiday on Thursday, May 1st. At the close of trade on Wednesday, Sensex slipped 0.06% or 46 points to settle at 80,242, while the Nifty settled with a notional loss of 2 points or 0.01% to end at 24,334. In the process, Sensex signed off the month of April with a solid gain of 2,827 points or 3.6%. The Nifty gained 3.5% or 815 points in the month of April. Despite a 10% rebound from April lows driven by increased foreign institutional inflows, amid a perception of India's relative insulation from global trade tensions, the risk appetite has diminished recently following heightened concerns over geopolitical tensions between India and Pakistan relationships after the deadly terror attack in Kashmir. Foreign institutional investors continue to lend crucial support. In the past 10 trading sessions alone, FIIs have pumped in a net of 37,325 crore rupees into Indian equities. India wakes the fear gauge spiked 5% in Wednesday's session to climb past the 18 mark, signaling a rise in market jitters. On the Nifty, HDFC Life, Insurance, Maruti Suzuki, Bharti Airtel, Power Grid Corporation, and SBI Life are among the top gainers, whereas Bajaj Finance, Bajaj Finserv, Trent, Tata Motors, SBI, and Ultratech Cement were the key laggards. As the headline indices slipped, the broader markets followed suit. Nifty Mid Cap 100 and the Small Cap 100 indices declined 0.7% and 1.7% respectively. Despite a strong April, both indices are still down for the year with losses of 5.3% and 12% respectively. Sectorally, Nifty Pharma, Oil and Gas, Infra, FMCG, Realty, and Energy ended in the green. Pharma and oil and gas were the top performers. On the flip side, Nifty Bank, PSU Bank, IT, and Metal slipped. The market sentiment was dampened by the escalation in tensions with Pakistan and a disappointing forward outlook from Bajaj Finance. Shares of Bajaj Finance declined over 5% after the company revised its FY26 guidelines. It now expects assets under management growth of 24 to 25%, down from its earlier estimate of 25 to 27%. Bajaj Finserv also recorded a decline of over 5%. Among notable movers, SBI dropped 3% amid reports that the state-run lender is mulling multiple fundraising options, including a follow-on public offer, FPO, rights issue, or qualified institutional placement, QIP, for the financial year ending March 26. Final decision likely on May 3, pending regulatory approvals from either the government or the Reserve Bank of India. In contrast, Vishal Mega Mart surged 10% after it posted an impressive 88% year-on-year jump in net profit to rupees 115 crore for the March quarter of FY25. Revenue from operations rose over 23% year-on-year to rupees 2,548 crores in Q4 compared to rupees 2,069 crore a year earlier. India's economy delivered a stellar start to the new fiscal, with the GST collection rising to an all-time high and digital transactions UPI continuing the double-digit growth even as US and China, two major global economies, faced pressure from tariff-related uncertainties. The GST collections reached an all-time high of rupees 2.37 lakh crore compared with rupees 1.96 lakh crore in the previous fiscal and beating previous April's high of rupees 2.1 lakh crore. Stocks to watch today: PNB Housing, JSW Energy, Maruti Suzuki, M&M, Paras Defense, Federal Bank, Eternal, Mobiquick, NMDC, NCC, Adani Enterprises, Adani Ports, Indus Towers, Jindal Steel, Nuvoco Vistas Corporation, Home First Finance Company India, Sundaram Fasteners, MOIL, Phoenix Mills, Godrej Agrovet, LG Balkrishna Brothers, JSW Infrastructure, and Sona BLW Precision Forgings will be in focus on May 2. What now for today? With the index sustaining above the critical 20 MA on the daily time frame, the bullish trend remains intact. Momentum also remains strong with the RSI holding about 50 and showing a bullish crossover. Technically, the market is consistently facing selling pressure near the 24,450 resistance zone and also formed a double top pattern on intraday charts which supports temporary weakness from that level. On the higher end, resistance is placed at 24,550. A sustained move above this level could trigger a decent rally in the market. On the lower end, support is seen at 24,200. Below this level, the market could retest that 24,000 level. If it breaks that, further downward movement may continue, potentially dragging the index to 23,900. In the US overnight, US stocks advanced on Thursday with the Dow and S&P 500 posting their eighth straight session of gains after strong results from mega caps. Microsoft and Meta eased concerns that potential traffic tariffs could dent economic growth. Dow Jones Industrial Average rose 84 points or 0.21% to 40,753. The S&P 500 gained 35 points or 0.63% to 5,604. And the Nasdaq Composite gained 264 points or 1.52% to 17,711. Brent crude is $61.88 a barrel. Gold is down at rupees 90,660 per 10 grams, and silver is down too at 94,930 per kilogram. And that's the wrap for today, my dear viewers. And if you got value from this, please do subscribe, like, and share this video as much as possible. You can contact me at st@st-money.com for any further information. I'll see you again on Monday morning. Have a great weekend. In the meantime, happy investing, stay inspired, and remember, it is all about money.